2022 has seen plenty of markets under pressure, which can make it difficult for traders and investors alike. But of course, you can still profit from falling markets. So in this video, I'm going to go through an explanation on how to short sell, and we'll look to set an example up on the Nasdaq 100. Hello, I'm David Jones from Capital.com, and I thought we'd do something different for this video. We'd do one of our educational videos talking about short selling. It's a phrase that many may have heard of, but it's a thing that not many people do. And considering the markets that we've been in over recent months, it's an important tool, I think, for anybody who's looking to trade a whole host of different financial markets. So as usual, in this video, I'll go through and explain how short selling works, things like how to manage the risk. Then we'll jump onto the platform and look to set up a trade designed to profit from market weakness, so you can see how it works in a real market. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. And of course, every Friday at 2:30 UK time, I do a live stream direct from our YouTube channel where we look at lots of different markets. If you're subscribed with the alarm bell clicked, you get a message off YouTube just as we're about to go live. Right, let's get into it and take a look at short selling in a bit more detail and why it's important to have this as part of your trading skills. So what is short selling? It's a way to profit from falling markets. I mean, clearly if a market is sliding, if you're trying to buy it and pick the bottom, it can be very difficult. I think something that has been very true in the sort of markets we've had so far this year. So short selling turns that on its head, and it's a way to profit from ongoing market weakness. So how does it work? The really simple way of explaining this, if we think a market is going to go up, let's say oil, we think at $100 a barrel, oil is going to rise, we might buy at 100 and look to sell at 110. Now, if we're short selling, we turn that process on its head. So if we think at 100, oil is too expensive, we sell first. So to open up the trade, we'd sell at 100 in the expectation that hopefully to try and profit, we're going to buy back later and lower down, let's say at 90 if the trade works out. So it's like buying and selling, but just turned on its head. So to open up the position, we sell short. And with brokers like us at Capital.com, you can do this just as easily as looking to buy first and profit from a rising market. So let's walk through an example, and then I'm going to go onto the platform and actually do this trade. Let's say you thought the Nasdaq was going to slide in price. So the US technology index, tough year so far, under pressure. Let's say you thought it was going to fall even further. Let's say the Nasdaq's trading at 12,000. You may take the view, okay, I'm going to sell short at 12,000. So you'd sell first, and if the market drops to 11,500 and you decide to buy back, then you've made 500 points in that example. Of course, the flip side, if you opened up your short sell at 12,000 and had to buy back if the market had risen to 12,500, then you've made a loss. But that's the mechanics of short selling. Of course, you can also use this to hedge an existing portfolio. Let's say you had a portfolio of stocks that for whatever reason you didn't want to sell out of, but you were worried about markets falling further. If you're taking the view, well, I might lose money on my existing stock portfolio, but you went short the stock market index. If the stock market index fell, you may lose money on your existing stocks, but you could make money on what's known as the hedge from the stock market index falling. So people don't have to use it just for out and out directional trading. But as ever, it's really important to manage your risk because just because you sell short doesn't mean the market's definitely going to fall. If the market rallies, you want to have something in place to come out of the trade at a manageable loss, exactly the same way you would do if you were a sensible trader looking to buy and profit from a rising market. So again, with short selling, we can use stop losses to manage the risk. I think with all of this stuff, it makes much more sense if we go through an example. So what I'm going to do is jump onto the trading platform and we'll take a look at the Nasdaq 100 index. We'll look to short sell and we'll look to do it with a stop loss and set that trade up so you can see how straightforward it is. Before we get into this short sell on the Nasdaq, let me just show you some of the open positions on this account. If you've watched our channel before, you know that when we talk about a market, I try and do an example trade to make things a bit more interesting. And there are actually quite a few shorts on this account. So an Amazon video that we did on the 7th of February of 2022 went short at 31.59. The market's now 22.42. So that trade is obviously profit because the market has fallen. There's a pound against the dollar short from the 29th of April, selling 16,000 at 126, and the market's currently 122.38. So again, that has made a profit. So it does show you the importance, I think, of trading markets or thinking about markets from both directions. So let's have a look at the Nasdaq and set our short up. So the Nasdaq 100 index, the high-tech stock market index, peaked in November last year. And you can see for much of this year, it's been in decline. The latest decline really started in April, early April 2022. And here we are. The market has bounced back slightly over the last couple of days. But let's say I'm going to take the view, this market is going to fall again. It's going to fall, let me pick a number. Let's say another 1,000 points plus from here. So I may decide to short sell. So what I'd like to do is to try and profit from a fall in the Nasdaq. So at least put myself in a position that will profit if the market falls. So I need to short sell for that. Let's set that up. So what I need to do, first of all, if I think the market's going to drop, I'm not going to click on buy because I'm short selling. So I'm going to click on sell to short sell. The first thing I'm going to do is put my stop loss in. So if I think the market's going to drop, if the market rises, I'd like to come out for a manageable loss. So I'm going to put my stop loss. The market's trading at 12,300 at the moment. I'm going to put my stop loss at 13,000. So obviously, if I'm selling first, I'm going to make a loss if the market rises. So I'm going to put my stop loss above where the market is trading now. And on our YouTube videos, we normally risk losing around £300 a trade. That's the level of risk I'm comfortable with. So I'm going to sell 0.54. So just to recap, I'm going to open up a position on the Nasdaq, which is currently trading just above 12,300. I am selling to open the position. So I am short selling and I'm going to sell 0.54 contracts. I'm going to put a stop loss on the trade at 13,000. So if the market rallies to 13,000, I'll be taken out for a loss, and my loss on the trade is around £300. That's it. I'm ready to go. So I'm ready to open my short sell. So to open it, we click on sell, and the confirmation goes through, selling 0.54 Nasdaq at 12,317.7. So now I'm positioned to profit if the Nasdaq slides. And if that slides, I'll make money. If the Nasdaq goes up, I'll be losing money, but I've got my stop loss to protect me. And if I take a look in my open positions now, there's the trade we just did, selling 0.54 Nasdaq 100 at 12,317.7. The market is pretty much where I opened the trade, and my stop loss is in at 13,000. So I'm short the Nasdaq. So hopefully that shows and demonstrates just how easy it is to trade markets in both directions. You still need to manage your risk, but if you think a market is going to fall, the way to try and profit is by using short selling. That's it. That's this brief introduction on short selling. We'll do further videos on this as the year goes on. But I do think it's a really important thing to consider if you are a trader, to have that ability to trade markets in both directions, particularly given the sort of markets we have at the moment. Right. For now, we'll leave things there. So from me, David Jones and Capital.com, good luck with your trading. For more trading videos just like this, please subscribe to our channel.